Welcome, Oliver.
Thank you.
Thank you.
So I'm going to be seated, because as a VC, I'm lazy. And it's a quality for a VC to be lazy. Do you know why, Emil?
No, I don't. Please tell me, Oliver.
Because if you're working too much, it means that you've got problem with the entrepreneurs. And if you've got problem with entrepreneurs, it just means that you do not select them well.
That's right. The deal flow management is our job indeed.
That's true. You got it. In fact, once you invested, normally you're not supposed to take the place of the entrepreneurs. But the job is to select the entrepreneurs and to manage the deal flow and to have the largest deal flow and to be able to select the best startups.
Yes, but Oliver, tell me, we saw this morning that it's very much more important to have a good team than a good idea, okay? The first, I mean, when you get the first piece of information you get from the deal flow are the business plans, not the people. So you can select which spatial skills you need to find out if behind a business plan there is a good team or not. At the very first level of selection.
Yeah, you're right. Well, the deal flow, we've got approximately 1,000 business plans every year at Cefinova. And it's true that since the team is so much important, the part of the deal flow we pay much attention are the people we know already. And we are at that stage in France and also in the UK where you have serial entrepreneurs. And a lot of people have said it all over the day that they've been doing that over and over. And since you know entrepreneurs, it's a very good recommendation if you've been working with them. Now, once you said that, you cannot eliminate all the entrepreneurs that are first entrepreneurs. And what you have to look at is a business plan, is a presentation, the market, where the people are coming from. And then when that looks interesting, then there's the first meeting. And that first meeting is very important because you will have the first impression. And you're right in the meaning that during that first meeting, what you are going to see is the aptitude of the entrepreneurs and if you think there's a good fit with you.
Very good. But we should talk about exits in this session. And I mean, exit is something that you already see when you evaluate the business plans for the first time, or the people. It's something that you already have in mind even from the first moment.
Absolutely, it's the second thing you're looking after, the attitude and of the entrepreneurs. I think it's absolutely key as an investor to know what type of exit you are going to do with the company. And that is part of tension with the entrepreneurs because, the good entrepreneurs are the ones who are building a company to last forever. That their ambition is to build the new Google or the new Facebook. And there may be some kind of tension with the VC because the VC looks for an exit. As a VC, we are also entrepreneurs. And, the Excel spreadsheet that Reese showed, with 95% of no, we've got the same when we're raising funds, just to remind and to share the business model of the venture capital. It's a little bit like entrepreneurs, we're raising funds. We're not raising funds to VC, we're raising funds to asset managers, which are competing with other class of assets, real estate, equity, large buyouts. And, we've got the same hit rates of 95% say, no, I don't like your team, I don't like your investment strategy. And 5% are going to give you millions. But what they want is a payback, that you're returning the money. So it's extremely important when you're investing in a company to know what type of exit you're doing. And then, you have to be extremely honest and fair. Is it going to be an IPO? Is it going to be a trade sale? Is it going something that could be sold in a secondary transaction? And you've got to put it very clearly before the investment to make sure that you've got a perfect alignment with the entrepreneurs.
Right, perfect alignment and investors that are also entrepreneurs is what also Andrea Di Camillo was saying this morning. It's not just a matter of finance to be a venture capital, and this makes sense. And which is in your experience in these days, the best way for a startup to make an exit? let's say in Europe, because
So exits are three ways. Either there's the IPO. It's a minority, to be fair. We recently IPO'd a company called Inside Secure in France. That IPO was very special. Nihal just talked about it. It's about NFC. What Inside Secure is doing, Inside is doing the chips that enable a mobile phone to be a payment systems. So it's the leader, it's a worldwide leader in near-field communication. It's a company based in Aix-en-Provence, so not far from Italy. And this company had all the characteristics to be IPO'd. Worldwide leader, they're number one in the world. In a market that is totally disrupting, you know, NFC is going to be big. Making solid revenue, talking about 200 million euros revenues. And a huge IP and already profitable. So this IPO was the largest IPO in France over the past 5 years in high tech. We raised $100 million, oversubscribed 5 times, so that was a success. But you need to align a lot of things to do that.
And when this company was founded?
The company was founded in the year 97, so it was a long, long trip, and we invested it in 2005. So, see, a long story, quite
Very
a long
much.
story. But you know, and that was due to the time of the NFC. You know, NFC has been something in the air for over the past 5 years, and it's just now that you've got the first orders. And Gartners predict that in 2015 there will be 1 billion NFC chips. So 1 billion NFC chips right now, and NFC chips cost a little bit $1. You see the size of the market. So that is an exception. Most of the startups who invest are going to be sold to larger companies. And that's also need to be highlighted very, very soon. For instance, I've got a lot of deal flows in companies making enterprise software, where I'm telling to the entrepreneur that, do you know how many companies in enterprise software do you have in Europe over 200 million euros? I was saying, well, I don't know. I told them there is 16. There are only 16 European companies above 300 million euros valuation, so that are in a position to buy your companies as startups. In the US, there are 250. So if you think that your future company is to be bought by another company, well, you'd better speak good English and be friendly with American people.
Okay, I think you can be friendly with American people anyway, but so merger and acquisition is the main route for exit strategies. And okay, you named American companies, but if I mean, if your startup grows up in Europe, okay, you probably tends to be to plan an exit strategy also in Europe, where the major of the economy is made by small, medium enterprises that works in manufacturing sectors. So, because now we are talking about digital startups, which is the relationship which is the interest from the industry, manufacturing industries in Europe to digital startups, if any, from your point of view?
I think it's different. What is really cool about the digital industry is that there is a balanced ecosystems where you can share IPs and build solid partnerships between the different companies. You wouldn't find that in other part of the industry. If you take, for instance, the automotive industry, and we are quite good at that in France with Peugeot and Renault, and also in Italy with Fiat, this industry doesn't have a true story of partnerships with these ecosystems. So, you know, they tend to be extremely brutal, where they're subcontractors. By the way, they call it subcontractors, not partners. They do not leave any IP to their partners, and they are not very acquisitive as regards startups. So, you know, it's definitely a space where you would not invest in software, in digital media, in advertising, in semiconductors. You would go for that because they are more healthy business. So I think one of the challenge of the manufacturing industry in some industry is to have this very innovative environment and to go into solid open innovation. And one area where it is moving, which is interesting because there are some leaderships in Europe in that, is the energy environment. because some groups like Total or Schneider or in the electricity are more aware that there is going to be a lot of innovation in that space, and they try to build some ecosystem that is going to foster innovation. One trend that is really interesting in the VC industry is the mushrooming of corporate VCs, where some corporate are launching venture capital, and they do that in a very mature ways. For instance, they are not going to ask for preemption rights, so they are mature enough to say, if we're investing to back entrepreneurs, not to have some kind of rights of preemption if the company is interesting. And I think that in the industry, it's going to be also very interesting to see if there are going to be new innovation through this venture arm.
That is very interesting. What I'm seeing is that there's a sort of new way. I try to call it, because I'm a journalist, I tend to invent new terms, and I try to call it something like 3D digital or art digital. Well, I'm seeing that, for example, a new generation of startups are concentrating on aspects like low-cost robotics, on medical devices, rapid prototyping, things like that. That they use a lot of digital technology, but it's in a more let's say manufacturing way, and this is something that could be a good wave of startups. Are you seeing something similar in France?
Yeah, I think it's a good way to differentiate and to build a case for investing in Europe, because in that type of investment, you're not only relying in software, you're mixing some skills from engineering, mechanicals, and software. I think it's extremely hard now, given the advance of the Silicon Valley ecosystems, to have really disruptive things coming from Europe. But mixing software with manufacturing, or I'll give you another example, mixing technology and the luxury industry, which is an area where especially Italy and France are good at, could be a good thesis of investment. I'm just going to give you an example in our portfolio. We've been investing in a company called Celsius. Celsius is manufacturing phones that are worth 300,000 euros. 300,000 euros. So you would say, who is going to pay for a phone that is 300,000 euros? Well, you know, it's a high luxury phones where you put a watch with a very high-end mechanism. So you're traditional with like the Swiss watch industry, and putting mechanical inside the phones. And there are some millionaires, some connoisseurs who would be the same, who are going to buy some yachts or some very expensive cars, who are interested in that. So it's a mix of technology, but you also leveraging the skills of luxury that you got in Europe.
Very good. Let's see if we have some questions from the floor. Raise your hands very well, because I can't see almost anything.
Is it on? Here we go. Many of the entrepreneurs here in the crowd actually asked me how to meet investors. You know, how do you find investors? I think there's a theory that in America you can just show up in a coffee shop and they're waiting for you with a checkbook, which is not true. Well, maybe in the Valley you guys have it better than we do in New York. Grass is always greener. My point is, in the U.S., a lot of investors make themselves very public via social media. They either blog or they tweet. They are in comment forums and stuff like that online. Is that the case with European investors? And if so, why not? Because I think I've seen it work very well for young entrepreneurs to connect to a venture capitalist early, get to know them so they understand who this person is, and then when they have a company they're ready to invest, I'm wondering what it's like and why or why not.
Yeah, I think we are maybe a little bit more humble than our VC peers. I know that, you know, some VCs are really stars in Silicon Valley. Well, we, for instance, at Cefinova, we think that the guys who are making the job are really the entrepreneurs. If you come and visit us in Paris, there is a huge gallery of portraits, and sometimes when I get American VCs, it's partners, and we say, no, it's not partners, it's the entrepreneurs who made our success. So we may be not as, public as our VC peers, but what we're proud at is that every time we got a mail from an entrepreneur, every time we got a business plan, there's an answer. And there's a quick answer. It can be, no, it's not in our strategy, Our ratio is 1,000 business plan received, 200 meetings met, and at the end of the day, 3 investment made every year. So that's how we work. But you're right. I mean, what I'm more ashamed as a VC is sometimes, and I heard that yesterday evening from another guy saying, I've been sending you a business plan, and I don't have any answers. I've been trying to contact you, and I don't have any answers. I think, I mean, it's our duty to give you an answer. If it's yes or no, it is, but quick answer.
Thank you.
Hi. Yes, hi. I just wanted to ask you about the experiment that they're doing with the Chemo Ventures in France and Xavier Niels and all this apparently huge venture capital and incubating activity going on.
Yeah, that's a very good question. I think it's really interesting because we're just at that stage at the moment in France where we have the new generation of VCs who are successful entrepreneurs and who start their own funds. So there is Chemo Venture that has been by Xavier Niel, who has been one of the most successful entrepreneurs in France, launching Iliad. And by the way, my last deal, opening RP, was done with Xavier. So it's really interesting to have that type of character at the board. There is also another fund made by Marc Simoncini, who used to launch Mythic. And there are others, such as Isei. That has a huge impact of the entrepreneurs community because, first of all, they are extremely aspirational for the young graduate. I remember when I was young graduate, people wanted to join the administration, and that's what I did initially, or large groups, and that's what I done. I've been before CEO of one of the large companies. Now I see the new generation. They don't want to join a big group, large corporate like that. They want to be entrepreneurs. And why? Because they've got this model of Xavier Niel, they've got this model of Marc Simoncini, and they got the capacity to meet them, and more of them to make them as an investor, as a board member, as an advisor. So that's huge progress we've been doing, and I don't know if it's the case in Italy, but I think that is really transforming the ecosystems. And serial entrepreneurs are something extremely valuable. I think one of the most successful web company right now, coming from France, a company called Criteo. I think how many people knows about Criteo? They're doing retargeting, and they are really big in the web advertising. And Jean-Baptiste Rudel, it's already his third companies. And what most interesting is that Jean-Baptiste, when he sold his first company to Hallmark, I think, and after the trade sale, number one, Jean-Baptiste funded Criteo, the number 2 funded another company, the number 3 funded another company, the number 4 funded another company. So from one very big success, you then have a mushrooming of serial entrepreneurs. And that happened just over the past 5 years, so it's quite recent. And I think it's going to be extremely structural.
Merci beaucoup, Olivier.